Hey everyone, this is Stefan James from Project Life Mastery, and today we're going to talk about the mindset of investing. An important and very relevant subject right now that I think can benefit a lot of people, especially because I've been seeing a lot of people react and panic and suffer over the state of the market, the state of the economy, the state of the world. You know, if you're investing right now in the stock market or the crypto market, you're probably feeling it a little bit. You know, you're seeing your portfolio go up and down, and maybe the volatility is not making you comfortable right now, and maybe you've had some losses, and that's producing some fear and some panic and some anxiety and stress, and you're going through the whole emotions that can come with that. And I think it's important to understand that right now we're going through a season called winter. Right now we've got sky-high inflation. Right now we've got a war going on between Russia and Ukraine. And obviously there's some people that have the uncertainty that could lead to a World War III and what that might mean. And then we still got a pandemic that we're going through. We got all these things that we're going through that's affecting the world, that's affecting the stock market, the crypto market. And if you're not equipped with the right mindset, the right attitude, you can often lose money during these times. Often when people lose money as an investor, it's when they're afraid, when they're panicking and they sell and they take a loss from that. Rather than having a mindset to get through it, to have the emotional stability, and even look at the opportunity of it as well. So there's a lot that I want to address and talk about in this video that hopefully can support you. If you're a brand new investor, can help set you on a good track moving forward through your investing career, because without a doubt, there's going to be up and down times. You know, in fact, if you look at history, there's typically a recession every 10 years. There's typically a correction every year where it drops up to 10%, the market. So if you know that and you've kind of been through a few different crashes and you've been through some uncertainty, you learn over time to be more mature as an investor and to not panic, to not freak out. In fact, you might even get excited. For me personally, I've been through a few different crashes, and the last one that occurred now during the pandemic, I was ready for, man. I was prepared for that crash. I didn't think a pandemic would create a market crash. I thought, you know, we were due for a crash just looking at history, because the last one was 2008. It typically happens every decade if you look at the course of history. So I was prepared for it. I was excited. Yes, I can now buy more companies, more investments at a cheaper price than what it was before. Because when things are all high, everyone feels great because they're making money, but it's also hard to get into the market and invest when things are at all-time high, because often when things are at all-time highs, they're overvalued. And so it might be harder to invest in a Google, an Amazon, a Tesla, or Bitcoin, or Ethereum, or whatever the investment might be when it's at an all-time high, when it's trading at a multiple much greater than really what it's worth. And so when things correct and when things crash, and you know, it can be an opportunity to buy more at a cheaper price and get into the market. That's one of my favorite times to buy. And you got to understand that largely the value and the price that investments, stocks, cryptocurrency, real estate, what it's trading at is often not a reflection of the true value. It's often based on the perception and the emotional state of the market. So when people feel things are going to go up, when they're feeling greedy, when they're feeling things are great, then oftentimes things go up. And then when there's panic, when there's fear, things go down. Often might have nothing to do with the company. You know, you could have a company like Alibaba, for example, one of the biggest companies in China, one of the biggest companies in the world. Great balance sheet, great business model, great management. You know, they really checks the box on a lot of things. But then there's a fear or uncertainty that people have regarding some sort of regulation or government intervention from China, whatever it is, and how that might affect people. The company is still running and operating the same, but that fear causes people to sell. And so now you've got a company that is dropped by over 50%, and you know, is obviously, you look at the balance sheet, the revenue, all that stuff, and it's definitely worth a lot more than what right now it's trading for, but it's the fear and the anxiety and the panic that people have that really influences the market, at least in the short term. So it's really important to make sure that you recognize that. So hopefully it can give you some comfort to know that right now you're not alone. Right now, all the greatest investors, from Warren Buffett to Charlie Munger to Ray Dalio to Paul Tudor Jones to Carl Icahn, all these investors right now are experiencing the same thing. Maybe some more than others based on how they've diversified their portfolio. You know, there's ways you could be more conservative as an investor, and there's ways you could be more aggressive. You can take on more risk. And there's ways you can diversify yourself as well so that you're not as affected. And I think during these times, that you go through as an investor, you learn a lot about yourself, and you learn what your real and true tolerance and threshold for risk is. And that helps you rebalance and restructure your portfolio so it can be one that you can sleep at night and that you don't panic and freak out when these things happen. So there's a lot that we can learn from times like this, and that you will learn as you continue your career as an investor. It's important to also understand that no one succeeds in investing 100% of the time. Nobody has 100% winners. And so you're bound to have some losers from here and there as well. That's just the nature of investing. I mean, you got to know that if you're going to invest. Not every investment you make will be a success. Some might be, a really amazing success and really build your portfolio and your net worth. Others, once in a while you're going to invest in something and it might not be your fault in any way. You might have made all the right, followed all the right criteria for your investment and, did everything that made sense, and yet things still happen and occur outside of your control that will affect that investment and you'll take a loss. And that's why it's important to diversify, but you got to know that going in. You got to expect that from time to time you're going to have some investments that might be a loss and others that will do incredibly well. And hopefully you have a lot more winners than losers. That's the name of the game. Now, one mindset that I really try to preach a lot and want to re-emphasize is having a long-term mindset as an investor. Because when you have a long-term mindset, you're not really that rattled or fazed by what's happening right now in the short term. In the short term, anything can happen. Okay, there could be a pandemic. There can be inflation, there can be wars, there can be so many political things, laws that change, and whatever it might be. There could be, negative media that is going on with something. There's so many things that can happen that can affect your investments in the short term. And you can't look at things in the short term for that reason. You can't really predict things accurately in the short term. That's why it's all speculative. Nobody knows in the short term what's going to happen. There's so many factors and variables that are involved that can affect the market and your investment. But when you take a long-term horizon, it's a lot easier to safely assume that things are going to be up. Things are going to be good. Things are going to be prosperous because we can look at the course of history. We can look throughout history and we can see the depression and the recessions, and we can see all the downtimes and all the wars and all the things that have happened. But we've been able to see through evidence that no matter what, things always rebound and things always get better. And so that can give you a sense of certainty and a sense of faith as an investor that, hey, right now we're going through a downtime. Downtimes, winters, they never last forever. We'll get through this. And when we get through this, things will be much better and greater than it ever has. And that is something that will continue to happen and occur, in my opinion, as long as capitalism still exists. Because as long as there's capitalism, then obviously people are going to innovate, they're going to create, they're going to add value, they're going to grow, they're going to build the economy. Technology always advances, progresses. Generally things progress as it always has throughout history. And if you're someone that is so fearful and has a pessimistic mindset that, we're going to have an apocalypse in 10 years, the world's going to end, then I don't know how much I can convince you of that. And there's obviously people that might believe that, and there's investments for that as well. People tend to invest more in gold and precious metals to be more conservative if there is an apocalyptic doomsday scenario. So regardless, whatever your beliefs and your attitude and your mindset is, you want to make sure that you're investing in accordance to that. But for me, because I always look long-term, I'm talking 10 years, 20 years, decades from now, I'm not so concerned about what's going on in the short term. I know that things will rebound. I know that things will get better. Another important mindset to recognize is the illusion of loss and gain. Okay, so for example, let's say you're investing in Bitcoin, and Bitcoin has dropped from 69,000 or whatever it was to 40,000, and then you're freaking out and you're panicking because you feel like you've lost a lot of money. You've had this big drop and it's not looking good. You got to understand that that's an illusionary loss. That's not a real loss. You only lose if you sell. So if it did drop by 30% and then you sell, then yes, you would take a loss. But if it drops by 30% and you don't sell, you haven't lost anything. You still hold the same amount of Bitcoin. You still hold the same amount of shares of a company. If you own a real estate property and it drops by 30%, you still own that property. And tomorrow it could go back up. A week from now it could go back up. A month from now it could go back up. 6 months from now it could go back up. A year from now, 2 years, 5, 10 years, it could go back up. Just like how gain is also illusionary as well, because if you look at the markets back in November when things were at all-time highs, yeah, you might have felt pretty good. When you look at your portfolio, it looks pretty good, but it doesn't mean anything unless you sell. You haven't made any money when things are at all-time highs, not unless you sell and you actualize that gain. So you got to recognize that it's just an illusion. You can't react when you see things go up and down. It's only really matters if you decide to sell that investment. Okay, that's really what it matters. Now, when it comes to investing, what also helps you have that long-term mindset is to recognize that what you invest, making sure that it's not money that you need. Okay, it's not money that you need right now or in the short term. You want to make sure your job, your business, whatever means that you have for making money is providing for you, and then you're taking money to invest, and that's money that you don't need. You don't need to touch it. Even if there's an emergency, that you don't touch it. You have other reserves, a cash reserve there for an emergency that you can tap into, but your investments you don't touch. They're like the golden goose that's growing and growing and growing that eventually will lay the golden eggs, which will be the passive income that can allow you to live off of your investments. But you never want to shoot the golden goose, right? You never want to get rid of that, because that's the main ingredient for your long-term financial freedom, your success. So you want to make sure that you don't need this money. When you don't need this money, you can ride it out. You can ride out the low times. You just allow things to go through its volatility. Maybe if you have a reserve, you can buy more at a cheaper price. And then sure enough, you just have that confidence and the faith that things are going to go up. That's why you've invested in what you've invested in. It's because you have a long-term outlook on it, whether it's Bitcoin or Ethereum or crypto or stock market, whatever it is. You've invested in it because you have a long-term outlook. So you've got to stand by that belief. You've got to stand by that faith that you have it, that your investment is going to recover and that things will sure enough be much greater and better than what it was before. Okay, so recognizing that I think is very, very important. Another thing that I want to dive into is your tolerance and threshold for risk as an investor, as well as how you allocate your portfolio and how you diversify. When you make an investment in a stock or Bitcoin or whatever it might be, you have to look at things from two different perspectives. You got to look at it from an optimistic perspective. Okay, what's the upside of this investment? But you also have to look at it from a pessimistic perspective as well. You got to be balanced in that, meaning when you make an investment, you got to know that you can lose money in this. You got to know that there's a risk. You got to know that there's a chance that whatever you invest in could go out of business or go to nothing. Okay, and that's something that you have to be prepared for and accept as an investor. If you resist that, then sure enough, when things do drop, you're going to suffer. If you expect that and know that that can happen, then that will ease your mind a little bit. You'll know, okay, I knew that that was a possibility. There's a risk that things could crash or go to nothing. I knew that going in. When you have that pessimistic perspective and the optimistic perspective, you're more balanced and you learn how to set up your portfolio in a way that can mitigate risk. So for example, you've heard the saying, don't put all your eggs in one basket. Putting all your eggs in one basket would presuppose that you're only optimistic about your investment and you're blinded to any of the negative downside. You're not pessimistic in any way. So by having some pessimism, you recognize, okay, no investment's 100% guaranteed to return. And so therefore I need to diversify into many different asset classes. So, okay, I'm going to put a certain percent that I'm comfortable with. Okay, and that's the key. You've got to determine what you're comfortable with in whatever asset class it is. So cryptocurrency, hey, maybe you're learning, yeah, I'm not comfortable with 50% of my money in cryptocurrency. I'm not comfortable with 80% in cryptocurrency, with the volatility that I've seen from it. So knowing that, maybe you got to be more conservative with cryptocurrency, but other investments you can allocate your money to and you can be more diversified and spread out. You can invest in individual companies like Amazon and Google and Facebook and Meta, all those different companies, but you got to recognize that there's a chance that those could drop or go to nothing. Now, the big companies, they're less likely to go to nothing because they're pretty, stable. They've got great balance sheets. They built their brand. They got a track record. They've got a lot of great things going for them. So it's a lot harder for, one of these companies to go to nothing. But without a doubt, they can still crash. We've seen that with Alibaba. We've seen that with Meta, Facebook, right? They decided to change their business model a little bit, direction to the metaverse. They've had some bad sales figures due to some changes with Apple and their advertising. And so sure enough, you saw a company that one of the biggest companies in the world cut its price and its value by 50%. So that can happen even to the best companies in the world. So you got to know that. You got to be prepared for that. Now, yes, you can make a lot of money from these companies. I personally made the most money from Tesla and Shopify and these individual companies, but I also know the risk that's associated with that as well. And so that's why one thing that I always recommend is to build your portfolio off of a base of index funds, which is basically an exchange traded fund, an ETF, that's you investing in a basket of companies. So for example, you can invest in the S&P 500 exchange traded fund, which tracks the S&P 500 index, the top 500 companies in the United States, the world's greatest economy. And that way you don't have all your eggs in one basket. And it's not going to be as volatile as individual companies. It's not going to be as risky as individual companies. So you've got to know the different types of investments you can make and make sure that you are, as you learn as an investor and you go through and you kind of realize what makes you uncomfortable, what makes you panic, what makes you have some anxiety and not be able to sleep at night, you've got to learn from that and then restructure your portfolio so that you are comfortable with it. There's some people, they're 100% in on crypto, all their money is in it, and they're comfortable with that. All right, fair enough, more power to you. Other people, they're not comfortable with that, right? So you've got to know what your comfort zone is. You got to know what your threshold and what your tolerance is for risk. And that will guide you as an investor. But if you're brand new, it's often better to be more conservative at first, and make sure that you understand the risk that you're taking as you're investing your money. Guys, these are the main things that I really wanted to talk about today that I really hope can support you guys. It's just understanding this is a long game. And, I'm often motivated more than ever when there are down times to be prepared for that, because I know it's tremendous opportunity when the market is down. So hopefully you guys have that optimism and can, take on some of these mindsets and beliefs to support you guys in your investing career. But it's good to always, again, understand that things are often temporary, that the bad times don't last. There's opportunity in it. Think long-term, diversify, protect yourself, be conservative in certain ways with your portfolio, and be prepared. Be prepared so that you can take advantage of opportunities that might arise like this. So hopefully this video is helpful for you guys. I've been sweating quite a bit here outside trying to shoot a video here in Panama in the afternoon, which is not the best time to do it. But I hope you guys enjoyed this. If you enjoyed it, hit the thumbs up button, subscribe for more videos here, and I look forward to seeing you again soon. Take care.